Good morning, good afternoon, and good evening to everyone who is joining us today from all over the world. My name is Mia, and I'm co-chair of the Speaker Relations team for the China Gulf Forum. It is my great pleasure to welcome you to the Economics and Finance panel. We are extremely grateful for the amazing speakers who will be participating today. This panel will be a moderated discussion followed by a Q&A session. The discussion will last for approximately 1 hour, followed by a 15-minute Q&A session. You can send your questions to the Q&A box and our moderator will go over them after the panel discussion. This will be then followed by a 10-minute break before our next panel. This panel will discuss the impact of sovereign wealth funds and foreign direct investments on sustainable development in a post-pandemic world, and will also touch on economic development in China and the Gulf region. So please allow me to introduce our panelists and moderator for today. Our moderator is Mr. Calvin Fu. He is currently the chairman at China Innovation Finance Institute, as well as the China president and APAC chief economist at IFC Federation of International Financial Centers and International Innovation Centers. He was previously the China chief representative of the Abu Dhabi Global Market Financial Services Regulatory Authority. Our panelists include Dr. Ted Chu. He is currently the chief economic advisor at Millennium Institute and was previously the chief economist at Public Investment Fund of Saudi Arabia, as well as the International Finance Corporation, Abu Dhabi Investment Authority, and General Motors. We also have Dr. Rodrigo Zaidan, who is currently the Associate Professor of Practice of Business and Finance at NYU Shanghai. Professor Zaidan is also the author of Economics of Global Business, and his research has been published in some of the top journals in finance and economics, such as the Journal of Corporate Finance, Energy Economics, Harvard Business Review, and the Journal of Business Ethics. So without further ado, I will hand over the time to Mr. Fu to kick off the conversation. Thank you.
Thank you so much, Mia. Hello, everyone, and the friends from the Middle East, China, and the world. I'm Calvin Fu. Now I'm in Beijing with Professor Zaidan in Shanghai, and then our another panelist, Dr. Ted, Professor Ted, is in US. It is my greatest honor to chair this panel. I think today we have already invited two very well-established experts as well as scholars in this field to give us the real solid leadership about the sovereign wealth fund, the ESG investment, and also how the sustainable development grows for the whole Gulf countries and China. Because as you know, the China has a rising impact, also the economic relations with the Gulf region, and particularly in UAE, in Abu Dhabi, we know the foreign FDI has been rising in the past 2 decades. The first round is starting from the SOEs sponsored by the government, and then let's extend to the private sector. More and more leading Chinese innovation firms, the largest ones around the world, has already started their regional headquarters in the Gulf region, particularly around the UAE, the 2 FCs, Abu Dhabi and Dubai, etc. And on the other side, this region is famous for the energy industry, as well as the sovereign wealth investment, the resources over here. So today we will discuss all these interesting topics around these questions. Roughly, we have 3 directions. One is about the sovereign wealth fund and the FDI, foreign direct investments between two regions. And then we will discuss about the sustainable economy, sustainable development, and the innovation investment around this area. And then we will also touch the cross-disciplinary topics between the economic development, between the culture, economic culture, also even the talents, etc. So we have a lot of questions in hand. So, but the first one we want we want to go to the Dr. Ted. We want you give us your thoughts about what's the sovereign wealth funds and how the sovereign wealth funds, the development in China, UE, and the whole region, and even their investment strategies in general to the region, to China, for the region, for China, particularly with the current situation, the post-pandemic time period. Thank you so much, Dr. Ted.
Yes, so thank you, Kevin. Thank you, Mia, and organizers of the forum. I feel very fortunate to be able to participate in the discussion of this topic. And having been back to the Gulf region for a number of years, I really appreciate the reconnection to the region. And of course, I'm born and raised as a Chinese, so it's very, very dear and near to my heart. So sovereign wealth fund. The sovereign wealth fund are in general defined as a fund that has two main characteristics. The first one, it must be state-owned. And the second one, it is making investments primarily overseas. Now this definition, the first one is crystal clear, 100% owned by the state. The second one is a little bit not clear cut because some sovereign wealth funds do invest domestically, but the primary goal is to invest overseas. And the funds, the source of funds coming are primarily from two sources. The first one is from the selling of the commodities, and a typical Gulf region sovereign wealth fund are using the fund money received from selling natural resources. And another source of sovereign wealth fund money is coming from is from the trade surplus, is from the reserves, excess reserves of the central bank. And I would say most sovereign wealth funds in China primarily depends on that source because as we know, for a long time, China has run a large trade deficit, trade surplus, current account surplus. So that money accumulated allocated to this to the fund. And a third thing that's differentiated from the sovereign wealth fund from other investment funds is its purpose. So the primary purpose of sovereign wealth fund is as the largest sovereign wealth fund in the UAE, the Abu Dhabi Investment Authority has always stated is to preserve and grow the national wealth. Because fundamentally, we all know that nothing good will last forever, in a sense that the natural resource will be used up or becoming less valuable in the future. The trade surplus can diminish over time as a country grows out of its initial industrialization process. So how to preserve and grow the wealth for future generations, I think it's the primary responsibility of the sovereign wealth fund. And as you said, Calvin, that the sovereign wealth fund plays a big role in the region and in China. And I like to point out that the first sovereign wealth fund was actually coming out of the Gulf region. It was a Kuwait fund established in 1953.
Thank you so much, Dr. Ted. Professor Zidane, actually, we know you are also expert in this field, particularly in how the sovereign wealth fund to facilitate its sustainable growth of the emerging markets, particularly like the GCC countries. Because I think a lot of students and friends online is very aware that among the top 6 or top 8 sovereign wealth funds, the Middle East have 4, the Asian have 4, in Singapore and in China. So our question to you is, how the sovereign wealth funds can increase or help to increase economic sustainability in the whole MENA region, and how China's FDI through this kind of sovereign wealth funds into this region, and in the future, how they cooperate better to maximize the well-being for two countries or for two regions. Thank you so much, Professor.
Thank you, Calvin. What I'm gonna do is I'm gonna continue directly from where Ted ended. I'm gonna show you the data on exactly what Ted said about the growth, the accumulated growth of foreign reserves in China. I have that data. I prepared that data for everybody. I use that data in my book. So let me share with you that data. Since I have prepared it. So first of all, just some context, okay? Let me open up here. Some context first. When we talk about FDI from China to the MENA region, and I'm gonna focus mostly on that. My story is gonna be mostly a story from the Chinese side. I am in Shanghai right now. I am locked down. I made a decision of not leaving China in the middle of the lockdown, even though the lockdown is quite stringent, partly because I wanna be here. I wanna report. I wanna leave in China, right? First of all, the Belt and Road Initiative has been changing a lot, right? Before, it was mostly based on grants. Is now mostly based on loans. And I want to explain why, right? Just so people have some idea in terms of numbers, right? In the last 16 years, right, we're not counting 2022, of course, Chinese investments have totaled over $40 billion in Saudi Arabia, over 36 billion in UAE, 30 billion in Iraq, so on and so forth. So we're talking about $130 billion, right? Cumulative. We're not talking about every year. That would be more than some of this country's GDP. But we're talking about a lot of money, right? So we're talking about sizable investments, right? From everything, from shares in energy, from agreements to purchase energy, to investments in local companies, construction projects, so on and so forth, okay? I'm not that optimistic about the future, the near future. I'm optimistic about the long-term future, right? In a way, people overestimate the importance of Chinese investment in the short run, and people underestimate the importance of Chinese investment in the long run. And there are some reasons for that. First, of course, the Chinese economy is not growing as much as in the past, right? But still, there is a lot of space for the Chinese economy to grow in the next 30 years, right? But let me tell you a story here. Let me put in perspective this foreign reserve accumulation. So if we're talking about social welfare, sovereign wealth funds, they exist partly to manage foreign reserves, right? The main examples are Singapore, Norway. The Norwegian Sovereign Wealth Fund owns something like 2% of the entire global stock market, right? And mostly for the same reason as China, right? Norway continues to run gigantic trade surplus. Thus, the government intervenes in the foreign reserve market, purchasing foreign reserve, selling local currency, sterilizing these inflows, which is kind of complicated. I'm not going to touch on this topic. But the idea is to keep the currency from appreciating, right? China from the early 90s to 2006, it had a complete fixed exchange rate. So this is two dimensions, right? Here is the exchange rate, right? And is this this red line here. As we can see here, the exchange rate was completely fixed at 8.28 yuan renminbi per dollar up until 2006. From 2006 to 2008, the Chinese authorities allowed the currency to slowly appreciate, right? It's still, the trade surplus was so large, and this is what this other axis here tells us. This is trillion of dollars, right? So we start our story in 2004, right? From 2004 is the first year in which Chinese foreign reserves reach $500 billion, right? From 2004 to 2014, reserves grow from $500 billion to $4 trillion, right? At one point, China owned 30% of the entire public debt in the US, or something like that. Right. That was at the height of the Belt and Road Initiative. The Belt and Road Initiative had just started, and it started as one of the largest projects of foreign direct investment. And the reason that the Belt and Road Initiative started as this, and that the sovereign wealth funds started in China like this, is simply because China at the time predicted that it was still growing to increase its foreign reserves, which meant that there was a need to, in a way, expel foreign currency from the Chinese economy, right? But that changed. That changed in the period of 2015 to the middle 2016, when China suffered a speculative attack, right? So what is a speculative attack? Is a bet by market agents that the currency, in this example, that the currency, that the central bank would be forced to allow the currency to devalue. At the time, the currency, the central government, the People's Bank of China kept the currency more or less stable. And actually, that's what happened. In August 2016, the People's Bank of China had to let the yuan devalue by 3% in 2 consecutive days. It changed the currency regime. It stabilized the foreign reserves that fell from $4 trillion to $3 trillion, right? And since then, that's more or less the level of foreign reserves in China, $3 trillion, right? So this is more or less the amount of foreign currency owned by the Chinese treasury, let's say, right? So the sovereign wealth funds of China, the national ones are part of this $3 trillion. You might have provincial ones as well, but those are more difficult to measure, right? But the idea is that today, the Chinese, the renminbi has appreciated in the last 15 months. But one of the reasons that the yuan is appreciating is because the Chinese authorities are not purchasing foreign currency anymore. They are not building reserves anymore, right? Which means that the Chinese actions in the world will be much more pragmatic, right? What do I mean by this? Very clearly, what I mean is that in this period in which reserves didn't stop growing and were growing quite rapidly, the Chinese government was making plans to send money abroad almost by all means necessary, right? Chinese state-owned companies were buying companies around the world. They were buying buildings, they were buying property. A lot of investment in the MENA region happened in this period. This changed since then. Today's foreign direct investment, today's outflows of foreign currency from China are much more targeted, are much more pragmatic, which means that things like the Belt and Road Initiative that started as this monumental project of grants turn into loans and projects that were funded by loans from Chinese financial institutions. Why? Because there's no need to send money abroad anymore. China still runs a trade surplus, but it runs a service deficit, right? And it is allowing the currency to appreciate instead of building reserves. And that is the story that ties into what Ted said. And that is the story that allows us to understand what is it that is going to happen with FDI of Chinese institutions in the MENA region in the future. Okay, I hope that answers your question, Colvin.
Thank you so much, Professor. You mentioned a couple of good points that we will be developing in the coming discussions. So particularly you mentioned the Belt and Road and its impact for two regions. So I have a question then to Dr. Ted, because you have worked for the GCC, multiple GCC sovereign wealth funds, and you also work for the largest developing institutions in US for the world. And you are also originally from China. So I want to ask you, because I think because Belt and Road experienced a new transition from maybe, as the professor mentioned, from loan, maybe in the future for the equity investment. My question for you is, what's your evaluation or what's your thoughts about the future of Belt and Road FDI from China to the MENA region, or by anchoring through the gateway of the MENA region and then to the world? So we want to have the source from you about this part. Thank you.
Yes, as Professor said, the strategy of the Belt and Road Initiative has shifted, and I truly believe that it will continue to shift. The overall goal, though, I don't believe it's going to change. And the goal is to go out and to develop this Eurasia economic bloc with the strongest growing part of the world, which is East Asia, connecting to the resource-rich part of the world, which is the Gulf region, and then also connecting to where the demographic development has been most favorable, which is namely Africa and some parts of South Asia. And then also to the far reach, it is to the second biggest economic bloc, at least by market exchange rate, and part of the most advanced economy in the world, which is Europe. So this overarching goal of integration, I don't think it will change, despite the recent rhetoric of globalization is going backward. Now, with that said, the One Belt, One Road initiative do run into various difficult challenges, and how to resolve those challenges is really what professional financial investment community needs to jointly work on. And I think one of the most difficult challenges is that the investment returns and the direct and indirect impact is still not clear. So to what extent that the China's development, particularly in the western part of the China's development, connect with development in the Gulf region and also in the over 100 countries where Belt and Road initiatives are being touched on, being both complementary as well as mutually benefit to both parties. I think it's very, very important. And also, I think it's to the point where we need to put in more emphasis on trust, because all these investments tend to be long-term, because those are not hot money flows. Once you sunk in the investment has to be there for 5 years, 10 years, even 20 years, or even for generations. So how do you make sure that your investment are secure and also generating a sustainable return? These are the things that I think the investment projects linking to the big grand goal will increasingly be concerned about.
Thank you so much. Ted, I also follow your answers because Chinese, the sovereign wealth funds or the quasi sovereign wealth fund like Silk Road Fund, like the AIIB, global bank institution. So they have more and more portfolio in Middle East, in MENA region, actually roughly along the Belt and Road Initiative, the whole the roadmap. I want to ask you, still in terms of sovereign wealth fund, FDI, what's the status quo and the impacts from China to the region, and particularly how these sovereign wealth fund institutions and their investments can change, can give the positive change or maybe the challenging change on these GCC economies or the whole MENA economies from your perspective based on previous practice around the world.
Yes, so in a very short span of 20 years, as Professor has already shown us the chart and the data, China has changed dramatically from the demand side and from the available financial resources side. And on the Gulf region part, they have witnessed a rapid change of their main customers of their commodities, energy commodities exports, changing from the West to the West, I mean, including Japan, to China. So China today is the biggest customer, whether it's Saudi Arabia, it's Abu Dhabi, and other countries. So with this change, then it becomes almost imperative that these two parts need to work together and needs to enhance their ties. And I will consider foreign direct investment by sovereign wealth funds are an important channel of developing this connection and developing this mutually beneficial economic ties. And with that said, I also, having been worked for two of the biggest sovereign wealth funds in the Gulf, I also know that those funds are actually run by professional investors. So what does that mean? That means that on the one side, you need to keep the strategic importance and strategic goals in mind. And on the other side, you need to be extremely pragmatic. You need to be thinking about, why should I put money here rather than here? In order to balance the risk, in order to diversify, and in order to have the greatest possible returns for the money that has been handed over to me, trusting me that the money will be managed well. And I will add to that, I'm sure we're going to discuss it later, that the demographic dynamics of these two parts of the world is also changing dramatically. And also as investments you need to pay attention, close attention to what is happening. In the Gulf, a big challenge is youth employment. So how do your investment fit into that? And then in China, we all know they're facing the rapid aging population situation. Professional investors who are guiding the sovereign wealth funds money will have to take those into consideration.
Great. Thank you so much, Dr. Ted. Actually, Professor Zidane has mentioned one very important point in his first answers to the question. I will follow that direction. My question now to Professor Zidane is, because you mentioned the Belt and Road investment in renminbi, which means the Chinese yuan. We want to have your thoughts about will the Chinese yuan become the global currency, and there is any or what is happening in the shift in China's management or supervision of its capital account to facilitate these kind of things happening. And we want to have your thoughts about the currency.
Thank you very much, Calvin. Ted, I have some slides on the population, the aging population as well. I'm going to show later. I really like your points. Your points are very, very important. First of all, let me answer the question very clearly. The yuan will not become the international currency anytime soon. It doesn't mean that it won't in the future. It just means that it's not going to happen very soon. It doesn't mean that China is not important. It's actually the most important economy in the world, but it's a very pragmatic reason. The renminbi is a non-traded currency. Is a currency that right now is under capital controls. It cannot be freely traded. It's not an international currency yet. And there is a very good reason for that. And here's the thing, there's nothing wrong with that choice. It's every single country in the world faces what we economists call a trilemma. Okay, so let me explain briefly what is a trilemma. In a dilemma, you must choose one among two bad options, right? In a trilemma, these are the three possible choices that every country has. And a country can choose two and only two out of these three choices, right? And every single country, no matter how small or how large, the United States follow the same rules of the trilemma as China, right? Brazil follows the same rule as Saudi Arabia. The UAE follows the same rules as France. It doesn't change. The idea is that a country can only pick two out of these three fundamental options. First option is an active monetary policy, which means changing interest rates to achieve some policy goal. We have seen the Fed increasing the Fed funds rate by 0.25%, 25 basis points a few weeks ago. This is active monetary policy. Most central banks and most economies have that. There are some examples of economies that do not have that. The economy of Hong Kong, that is a different economy from mainland China. In Hong Kong, there is no active monetary policy. The nominal interest rate changes with capital inflows and outflows, right? But those are rare. Then a central bank can choose between fixed or floating exchange rate, right? China, even though today's exchange rate is not totally fixed, the Chinese authorities every day, they determine what is the interval that the yuan can be traded, right? Which is the end date of last day plus minus 2%. Anything above or below that, it triggers an automatic intervention by the People's Bank of China, right? And free capital flows, right? So a country can have 2 out of 3, right? It can have active monetary policy and fixed exchange rate. Then it cannot have free capital flows. It can have active monetary policy and free capital flows. Then it cannot have a fixed exchange rate. And it can have a fixed exchange rate and free capital flows. Then it doesn't have active monetary policy, right? Many countries pick the same choice as China, right? Saudi Arabia is an example of picking a fixed exchange rate, right? Saudi Arabia actually picks free capital flows, doesn't have active monetary policy. But China picks a fixed exchange rate or a managed exchange rate with active monetary policy, which means that China cannot have free capital flows. Meanwhile, the US and Brazil and most countries and the Eurozone and Japan, they pick an active monetary policy with free capital flows, which means that these economies cannot have a fixed exchange rate, right? China's choice, there's nothing wrong, there's nothing inherently wrong with China's choice. Many countries make the same choices. But what happens is that when you have a currency that is not freely traded, it cannot become the international standard, right? So for the yuan to become a global currency, for the yuan to become the most important currency in the world, first, China will have to change its currency regime. It will have to allow free capital flows so people in other countries can acquire yuan, right? If yuan is to be used as a currency, people must be free to buy and sell yuan, and people cannot do it today with good reason, right? China is still a middle-income country. The moment that China allows free capital flows, it allows exchange rate volatility. A large economy like the US, exchange rate volatility is not a big deal. For a large economy like the Eurozone, exchange rate volatility is not a big deal. China believes that exchange rate volatility would not be something good for its economy at this stage of development. Because of that, China doesn't allow the yuan to be freely traded. Thus, the yuan will take a while for the yuan to become a global currency because it first needs to overcome this obstacle of being in a managed exchange rate system like the one we have today in China.
Thank you so much, Professor. Because in the last round of questions, both of you mentioned the very important issue, which is the demographic transition. I want to raise a question again to you because it seems both of you have your own answers about that. Ted, I want to have the question to you is China is facing the aging population, right? The whole MENA region, particularly the GCC countries, they are facing the rising younger population structure. So what's your viewpoint about the impact, influence on the economy development respectively for two regions or two countries? And how China and the whole GCC MENA regions, countries, they prepare themselves better to overcome these challenges and the transformation for their economy or even the whole social development. Thank you so much.
Well, thank you. It's a good question, and that's something that I thought about a lot. In normal circumstances, any society or economy, it is the old who's lending money to the young. So because the older generation have already accumulated a lot of savings, but they are reaching or already in the state of retirement, so they need income. So they need to lend money to the young, and the young, they still have a long, productive years ahead of them, but they have need to raise a family, buy a house, and so on and so forth. So, and their current income is not sufficient to satisfy their current needs. So this is a natural fit. So think about a country is also a natural fit where a aging country like Japan, like China, should lend money to where the productive sources are, where there's a lot of young people. So that makes sense. What the challenge is what I previously mentioned. You need to be realistic. You need to be thinking that, is it safe for me to lend money? Because foreign direct investment, in particular, are long-term investments. The money is sinking in. You cannot take it out that easily or take it out in the short term. The second thing is you need to be minded of the quality of young people. And this is a challenge that, you know, a Gulf region and many other parts of the world are increasingly facing. Is how to upgrade your the quality of your labor force. And one investment a project that I was personally involved in is to bring in more advanced edutech into the Gulf. So these kind of things that you had to be thinking about, and also something unique about the Gulf region among the high income countries, which I think it's fairly unique around the world, is open borders for low quality, low end labor, particularly from South Asia, from MENA region, and so on and so forth. So it's a very quite interesting and challenging situation. Say if you are a young Emiratis, if you don't have a good fit for the labor market, and you have competition from the low end, and also a lot of competition from the high end, that you have a lot of highly educated people from advanced part of the world freely coming into your country to work, then what is your niche? Where do you deal with it? And if on the individual level, it matters for you personally, but at the collective level, if a country cannot effectively addressing those issues through investments and through many education systems, through reforms in the labor market, many channels to solve the problem, then you do have a problem. And on the other side, for China, the challenge, as we all know, is how do you upgrade your economy, and how do you make sure that the quality of growth is taking more importance than the magnitude of growth, and how do you make sure that the investments generates sustainable return, including those investments from the Gulf region. And to that end, I had to be saying that it is actually a mixed record. Investment in the technology sector, investments in the many areas in China have not generated good returns financially. So I think that when you look at the picture holistically, demographics are so important. It is highly visible, but then how do you address the issue is very, very challenging.
So do you mind if I
Perfect.
If I discuss this quantity versus quality trade-off importance that you mentioned, that it's absolutely crucial, and I agree with you. So let's look at some data for China. Let's look at some data for the world. Let's look at some data for the UAE, right? For the Gulf region in general. You can pick a country in the Gulf, right? This is the population pyramid in the world. Okay, this website I highly recommend that you use. It's quite fun. It makes population projections. You can go to the future and to the past, right? This is the world. This is the world population pyramid at the moment. We have almost 8 billion people, right? Right now. If you have never seen one of these, the blue is the number of people that were born male. The pink is the number of people who were born female. In the birth certificate, right? This is just birth certificate data. Unfortunately, binary, right? We don't have, unfortunately, better projections than just this binary sex. Now, we can go, and as we can see, if we take the world as a whole, most of the world population is young, right? And as we go in the future, 2027, 2022, 10 years in the future, we can see that the world is going to be aging. But it doesn't seem like the world as a whole is aging very rapidly, right? But let's look at this country called China, mainland China, right? As we can see here, we can see that the population in China today is 1.45 billion people, right? It already has a completely different makeup to the rest of the world, and is very close to peaking if it had not peaked already, right? 5 years from now is going to be 1.46, 1.64, 1.464, and that's it. Look at that. If current projections hold, 50 years from now, the Chinese population will be 1.24 billion people, much smaller than today, right? Now, as Ted mentioned, this is a barrier, but it will all depend on the quality of the workers entering the Chinese market, right? Or China can do as the UAE, right? Let's go to the UAE, right? So what do you think before I click on the UAE? Do you think that the UAE is a young, an old? How do you think is there a discrepancy between the sexes, male and female? What is your prior? What is your assumption? I'm sure that you most likely have not visioned this, right? This is the population pyramid of the UAE in 2022, right? As we can see, what is the reason for this incredibly asymmetric shape is the fact that in the UAE, you have a huge amount of economic migrants. There's nothing wrong with economic migrants. I am an economic migrant. I am a Brazilian who lives in China, and I'm here to make a living, right? I do plan on staying for a long time. Sometimes economic migrants, they only stay for a few years to make some money, send back home, and then go back home. But look at what is happening there in the UAE right now, right? That is the choice that the UAE made in terms of building their society, right? Look at the amount of opportunities. We're talking about 10 million people in the UAE. This is 2022, this is right now. If we go to Saudi Arabia, we're gonna see that is not much different, right? The only reason that is not that skewed is because Saudi Arabia is a much larger population already. So the numbers don't jump, but it's still extremely, this cannot happen naturally. Only immigration can explain that, right? actually, people look at these population pyramids and see something abnormal. Actually, it's not necessarily abnormal. It can be a win-win situation for all involved. It's not necessarily the case, of course. Many people are exploited, but a lot of people do make a much better living than they could back home, and they improve their lives through economic migration, right? And that's where the quality matters, right? That is the whole idea. I'm speaking from NYU Shanghai to people in the MENA regions. In the MENA region. The problem in China and the problem in the MENA region is exactly the same. Is the quality of the workforce, is not the quantity. So in the MENA region, one of the reasons, as Ted said, that the economy couldn't make, like many investments have soured, is really because there is a barrier of efficiency. I'm a Brazilian. I know about inefficiency when I see it. I live in China. I know inefficiency where I see it. I've been to the MENA region more than once. There is a lot of inefficiency there, right? Now, other countries, this is not a problem that is only China is facing. Let me get another country that is facing this problem at a much higher rate. Look at Spain. This is Spain today. Spain is much older than China. The population is only going to decline, right? Look at that. This is the future of Spain, right? So it's not the only country, but again, the question is, what about the quality? And the quality of the investments and the quality of the people are much more important than the quantity. And that is going to be true for the China-Gulf relationship in the future. I already made a case for why quantity is not a main driver. Ted has made a case for why quality should be the main driver. And I'm showing you here that really quantity cannot be the main driver because the workforce in China has already peaked. The workforce in the MENA regions, a lot of it is driven by economic migration. So it's about building human capital that is going to drive this relationship forward. Okay, so I wanted to show you some data. You most likely are going to ask questions about these population pyramids, and in the Q&A, I will gladly speak about them.
Thank you so much for the thoughts in multiple regions around the demographic transition. Considering the time, we still have about 10 to 15 minutes, but we will manage to cover 3 questions: sustainability, culture, and COVID-19 around economics development of 2 regions, multiple countries. But the question about the sustainable development of China and the Gulf region, the MENA region, and how 2 regions, multiple countries can cooperate and interact in these very, very important areas. And Dr. Ted, it's your turn. Thank you so much.
Yes, thank you. So since energy, particularly oil prices, are so critically important in the Gulf, but also very important in many countries, including China as well, I will highlight the fact that how the pandemic has impacted the energy market. So for a long time, we believe that the equilibrium oil prices should be around $60 a barrel. Then during the pandemic, with demand in collapse, something as economists cannot imagine happened, which at one point, as you know, the West Texas oil, which is the most important benchmark price in the United States, went negative. Why? Because the oil whales keep pumping out the oil, and the oil, there's no buyer. And then so the storage companies has to charge for you to store that product. And the oil prices actually went negative because they just want to dump it. Right? I will pay you to take my oil, and that is something that extraordinary that previously on record in history never happened. But then you look at today, it is so dramatic. Yeah, today oil prices, because of the Russia-Ukraine conflict, had briefly passed 100. So where is the equilibrium? Does the equilibrium price of around 60 make sense? Because oil price have gone from about 60 down to 20, and now back to over 100. Where is that equilibrium? So it is so super important to as investor, as a person, you need to have a long view, but then you need to look at the market in a sustainability of the market in a realistic way. With all the talk about dealing with climate change, all the investments into renewable energy, electric vehicles, and so on and so forth. I look around the world and we are still utterly dependent on oil. And the big question for you, all the participants of the forum, is to think about is how long this situation will last, and how do we deal with the energy price volatilities, supply disruptions, and changing demand patterns. So this is one of the big questions in addition to demographics that the pandemic has posed on us. On the demographics, I will add to what Professor said by saying that it had come to a total shock that during the pandemic lockdown, many people believe that we're going to have a baby boom, right? Because you're home with your wife, girlfriend, you have nothing to do. Well, let's have some babies. But the reality is we actually had a baby bust so far. And for various reasons, I don't want to go into details, that the baby bust may continue. It may be a long-term trend. So those of you who have listened to Elon Musk, he had a recent, very interesting, long interview, but during the conversation, he mentioned that the #1 challenge is human population going down. And I totally agree with him on that. But that's on a side note.
Thank you so much, Ted. Professor, we want to have your viewpoints, thoughts about the sustainable growth, particularly in the post-pandemic.
Sure.
Yeah.
Here's the thing. My main contribution will be there is an old way of doing business between China and the MENA region. And that old way must change towards a more sustainable path. China is an oil-dependent country at the moment, right? China was speeding up the transition before the soft landing of 2016. Oil consumption and coal-related consumption sped up again, but China has no choice. Climate change is already real in China, is already affecting the countries, and especially as cities become richer, they will shift to services and they will become less oil intensive. And of course, the MENA region has always been historically a global supplier of oil. So much of that data that I showed you earlier was investments in fossil fuels. But the question is, and you are at the UAE, an area of the world that has been preparing for the transition for a while, right? The whole existence of Dubai is we need to find viable alternatives to the fact that we're going to run out of oil eventually, or people are not going to buy our oil anymore. And here's the thing, and this is the question that I don't know the answer to, is are China and the MENA region ready for investments that are geared towards speeding up the global climate transition, or are they still going to be the old type of investment in which China comes, buy access to oil, the Gulf economies sell that oil, use that money inefficiently, and in a way, instead of making the future more sustainable, get trapped into an ever-growing spiral of looking at the oil price quotation to decide on how much money the country can expend next year. Again, it's not the most rational way to behave. And for China, climate change is an existential threat, right? In the simple way, the whole point of China is, the whole point of the Chinese government is that we sell social order, and social order cannot exist if climate change is bringing waves of destruction into Chinese society. So speeding up the transition should be the focus of any future relationship between China and the MENA region, even though it's very hard to do given the historical context of the trade between these regions in the past.
Thank you so much, Professor. You also mentioned the very important question is about culture. And my last question, because of the time, my last question is how the culture factor can further facilitate the future economic cooperation, the future economic sustainable development with the current extremely uncertainty of the global geopolitics. Maybe we started from Professor Zidane. Professor. Okay.
I'm sorry, I was killing a mosquito.
Yeah, I know Shanghai now. They have
no, it's hard for me to speak. I'm neither Chinese, even though like my family originally, from my father's side originally came from Syria to Brazil. I do know the culture in the Middle East very well through my family. I know some of the culture in China. There is one thing about the culture that is common, is that it is very pragmatic, right? This pragmatism can be used for good or can be used for corruption and bad things. Hopefully, that is not what happens from now on, right? That is also the question of sovereign wealth funds and the Belt and Road Initiative, right? The Belt and Road Initiative in itself is money to countries that need money. That sounds very commendable. But the question is, it is the use of that money that is going to determine if those investments are good, right? And in China, the culture is very long-term oriented. That is not necessarily true in some parts of the MENA region, right? After all, this long-term horizon is very uncommon anywhere else in the world. There is this famous, most likely apocryphal story about somebody from Europe, the US or Europe, asking an important Chinese politician, what does, this is in the 20th century, what does the Chinese politician thought of the effects of the Industrial Revolution, the French Revolution, on the 20th century society? And the answer of the Chinese politician was too soon to tell. We have not have enough time to digest the importance of the French Revolution of the 18th century, right? This is paradoxical given the nature of the Chinese society today, in which things seem to evolve almost out of the blue every 5 years. Still, this is the main question about the impact of culture. Will the relationship between China and the MENA region be driven by short-term monetary considerations and fossil fuels, or by long-term considerations of sustainable development? The only ones that can answer those questions are the Chinese and the MENA region authorities that are going to make these connections bear fruit in the future.
Thank you. Very good. Ted, this is the last question for our main discussion, and then we will have a 10 minutes Q&A from the students and the audience. What's your answers about this culture and investment economic development? Thank you.
Yes, I will be brief. So the most important thing to keep in mind is that both regions have a long history. They have, for various reasons, retained many of the traditional values, where the West have been changed beyond that, although some elements still exist. So for those reasons of retaining the traditional values, both parts of China and the Gulf are more suitable, and actually they are pursuing state-led development, and with sovereign wealth fund being a core part of that. So what do we think about state-led development? Well, I think we need to be very pragmatic, as the professor said, and we need to be thinking about how do you execute a state-led development. I don't think that overarching cultural foundation is going to change anytime soon. So let me give you an example. Many in the West will say, okay, well, no, you should let the market drive things, right? So one of the things that the markets drive things is invest in by private equity firms, and invest in private equity rather than let the state decide what to do. Now, something interesting happened. A local government in the Anhui province in China have had so much success, and some reporters say that, hey, the government was behaving like a private equity fund. So the point is that we should not be very dogmatic about, the name of the exact setup of the investments mechanisms and how they interact with the general economy. We have to be thinking about what are they doing, exactly what are they doing, and learn from each other, learn from the successes, and avoid many pitfalls.
Thank you so much to professors. The audience and students online, thank you so much for the listening to the first part of this panel. And then now we have about 10 to 15 minutes to finish the Q&A part. Currently in the panel online, I have 3 questions. I just start picking one for two speakers. The first one is, as of the rise of the South Asian markets like Vietnam, is the Chinese labor market still competitive in the global market by taking advantage of its high quality and low cost products, services? And what should China or UAE do to improve the quality of their labor forces? We started from Professor Zidane about Asian.
Sure. That is, I'm gonna tell you about the technological step ladder. As other countries rise, it is good that China loses competitiveness. That is literally the point of development. A lot of Chinese earlier development was based on low skill, low paid work. That has ended. That is good for China. It's good that China is not competing on low costs anymore. That is what makes China a middle income country. The fact that the minimum wage in Shanghai is 2,600 RMB today is something that allows the economy to continue to development without having to rely on low skill, low paid jobs. In fact, what has happened in China is that today the labor market for low skilled people is tight. Why? Because the Chinese growth has been so abundant that the demand has outstripped supply as Ted mentioned, the quality of workers went up, the wages went up. So the demand for low skill work is still there, but people are not paid pennies anymore. In 2006, 15 years ago, the minimum wage in Shanghai was less than 500 yuan per month. Can you imagine? Inflation in China has not been that huge. So how could somebody live with less than 500 RMB a month in Shanghai? Even if costs were lower in 2005, today the minimum wage is 5 times as much. That is wonderful for society. And it's okay that other countries take the mantle of low skill, low paid work, because hopefully these countries will also develop and we will leave that behind. We don't want Cambodia or Vietnam making a lot of cheap stuff and paying people pennies. That is bad for everybody. It's sometimes necessary, as it was in China, but it's not something that should be overly concerned, because China today is an upper middle income country, so it shouldn't be competing on low cost anyway. And it's not. The quality of Chinese good is already improving and productivity is improving. And you don't need to rely on low skill, low cost workers.
Thank you so much, Professor. Because David Landick also asked a similar question of this area. He mentioned how the demographics enable the policy input and then make up the whole capable population. And he also mentioned, are these measures determined decades ago, or is the future out of control for more decades? But before I answer this question, I want to ask, because we didn't have the viewpoints from Dr. Ted about your Chinese, about the Chinese yuan. Because here the question is, what does it mean for Chinese yuan to be international? What would be its influence on the global economy? How will the people and economies in the MENA region build or gain confidence in it? It's about it. I'm not sure if you would like to answer this question. Yeah, we want to have it. Ted.
So I agree with Professor Zhadan that the renminbi, the yuan, won't become a international reserve currency anytime soon because of the capital controls. So is there room for removing the capital controls? Right now, I would say no, right? Because the financial system is still not in good shape to handle the volatility of the financial market if you allow the free flow of money. And then secondarily, actually, despite a massive foreign reserve China has built up over time, there is a pent-up demand for Chinese assets to move overseas in order to diversify and in order to seek better investment opportunities. And nobody knows what size of that. And if you open it up, who knows where the market will drive the yuan to what level? It could be somewhere here, could be somewhere here. As I said, regarding the oil prices, you can say the equivalent should be 60, but then it could be, in a span of 2 to 3 years, it can go from 20 to 100. So these are very, very difficult challenges. And then the currency is such an important thing that the government will continue to take more of a cautious steps towards liberalization. But the recent geopolitical events do add urgency, as we all know. What has happened to the foreign reserves of Russia?
Okay, thank you so much. Actually, I think more the question are crowding in about the renminbi. Because now we have the pandemic, we have a conflict between Russia and Ukraine. Maybe this is the last question. Sorry, we also have the Bank Road question, but we try to answer online by our experts later. So the common question is, now we have Russia, a war between Russia and Ukraine, will this change China's renminbi internalization strategy, or would it have also impact on the trade dominated in renminbi? Professor Zidai, can you answer this question for our audience?
I can answer this question. So I have written this for the media. China will soften a little bit the sanctions of the West against Russia by buying and selling goods directly to Russia. Today, 85% of the trade between China and Russia is settled in either euros or US dollars. Can they be settled in renminbi? Yes. Right? But my question is, why would the Russians want that? So the renminbi is not internationally traded. It's not a fully convertible currency, right? In other words, a country can only sell renminbi theoretically back to China. So by settling trade in renminbi, what China is saying is that the Russian importers or exporters can only sell the currency to China. Of course, during the sanctions, that may be viable. But why would an exporter want to sell a good to China, receiving a renminbi, if the only two options is selling renminbi to rubles via the Chinese government, or using the renminbi to buy things from China? Why would an exporter want to do that? Right? And that is at the crux of the matter. It is the fact that a currency, to become international, it must be used. Right? The euro, the USD, they are used for trade, they are used for financial settlements, they are used to price goods, right? My question is not about the supply, my question is about the demand. If you are outside of China right now, you cannot bring your money into China freely. You cannot take your money from China freely. Why would you want renminbi? You can only want renminbi if you have debt to a Chinese-owned institution, which is fine, right? But the demand for renminbi is not there yet. The demand for renminbi will only exist when the yuan can be freely traded. And it comes back to this question of the yuan cannot be an international currency until it is freely traded. China wanted that to happen. China was actually lifting capital controls until 2016. And that's how the speculative attack happened, right? It happened because the capital controls were partially lifted And market agents were able to bet against the yuan. But that has changed. So the answer is, will the war between Russia and Ukraine change China's renminbi internationalization strategy? Fundamentally, no. Topically, yes, but fundamentally, no.
Okay, thank you so much, Dr. Tatu. Thank you so much, Professor Zidane. I think we have a very productive and fruitful discussion today for this important session. Actually, I want particularly emphasize this is the third forum, China Gulf Forum, hosted by the New York University, Abu Dhabi. Again, particularly with the very, very huge uncertainty of geopolitical development and the current pandemic development. In the future, we hope we can continue the discussion online or within the whole community initiated by the whole Abu Dhabi, NYUAD, and all the whole NYU around the world, in Shanghai, in New York, and in other school zones. Thank you so much, all the audience and students online. We hope our panel can give you what you want to know around these 6 areas of questions. And we also hope to maintain connection with you, and we can see you in the future next year. And please enjoy the coming sessions of the 2 days forum. Thank you so much. Bye-bye.
Thank you.
Yes, thank you so much to our panelists and moderator for a great session. We really appreciate your contributions and thank you for your time. We will now have a short break, and our next session on business and entrepreneurship will begin at 5:30 p.m. Abu Dhabi time, 9:30 p.m. Beijing time, and 9:30 a.m. New York time. So hope to see you all there. Thank you.
Bye-bye.